We know that there are some SPACs that can go absolutely parabolic. In fact, we see it happen all the time. Is BFT going to be one of those, or is it going to be a dud? How am I going to play it? Well, in this video, I'm about to tell you exactly how I plan to play BFT and what you should be doing. And we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If you're new here and you want to learn how to use stocks and options to make your portfolio go parabolic, make sure you start now by subscribing and tapping that bell so you never miss an upload. So here's how I play it. This one doesn't really have options, so I play it a little differently than the ones that do have options, and I'll actually get into that in another video. But back to BFT. So there are a few things to consider here. Number one, we have a $10 floor, meaning that our risk to the downside is at this time only $3.20, and that's assuming that you buy this stock right now at the price it's at, which is $13.20 in the after hours. But to make a quick point, that's why I love trading these SPACs, because your risk is essentially defined, making it easy for anyone to identify potential risk versus reward. Now, number two, we know that this merger will not go through until the first half of 2021, but to be specific, the company said that it plans on merging in the second quarter, so we're talking about April and June, which is pretty much a long time away. So with that being said, don't be surprised if the share price remains pretty stagnant, unless of course there's PRs coming. So the usual pattern that we see out of these SPACs is a run up when they first announce that the merger is going to go through, and then if the merger date is close by, then we usually see some upwards movement, sometimes a lot of upwards movement as we approach the merger date, and then a sell-off. But we have seen a few that went parabolic after the merger, so there's really no way to predict what's going to happen. But a good thing to do is to be prepared for pretty much anything. So my general strategy with SPACs is pretty simple. It's to move in and move in fast, and if I get the right SPAC at the right price, like within the $10 range, I'm going to load the boat. But if I do miss that $10 range, then the next range I'm willing to start my initial position at is, up to 13 or even 13.50. And then I'll start buying in to average down on any red days. This is especially what I'm going to be doing with this stock. Today it pulled back to the mid 12s, so of course I bought more, and the lower it goes, the more I plan on buying. Now what I see happening with this stock for now is that we continue to trade in a range, and it could possibly be the range that we're seeing now until we start getting closer to the merger date. While I have you here, I wanted to quickly tell you about the brand new First Trade app, available for mobile or PC. The platform will give you access to powerful and easy to use tools and allows you to trade with less restrictions, zero commissions, zero fees, and you can use the first link in the description below to download a free stock today without having to deposit any money. This will greatly help out the channel and is always appreciated. And now back to your regularly scheduled programming. So unless there's some type of PR or a catalyst, of course, we may break out of this range here and there, but it won't be, very likely that we'll see it all the time or often, and I do expect it to drop afterwards. Now, with that being said, anytime that I do see a significant move to the upside and, see some significant gains, I'm going to be selling a portion. So how much I sell will depend on the size of the move. My goal is to sell enough shares to cover my initial investment and keep the remainder of the shares for free. Then I'll be buying back whenever the stock drops back down to, reasonable levels. So with the amount of time left to go until this merger is completed, I wouldn't expect this stock to be able to sustain any major moves to the upside. Now think back to Lordstown Motors, or ticker symbol RIDE. For a while it was, pretty much known as the stock that just wouldn't go down. It only knew one direction, and that was up. Until the day that it dropped all the way back down to where it started. And how many times did we see that happen afterwards? Probably, a couple, 2 or 3. So keep that in mind and always take profits along the way. But one thing that I've learned is to never sell the entire position on any stock that you intend on holding. So buy a position that you are holding, and then you can buy some shares to trade. Another thing about this stock is that right now the volume has been fairly low, and a lot of people still don't even know about it and don't even realize that it's available or what it is. So once they do find out, you can expect a lot of volatility and some serious FOMO buying, which will drive the price up for sure. But for now, don't get your hopes up that it happens too quickly, and I would expect the real FOMO to go down a lot closer to the actual merger date. Congrats, ladies and gentlemen, you've made it to the end of the video. If you like what you watched, make sure you subscribe, because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now, or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.